Hey, what's going on, guys? This is Terrence Ray, and I'm got a stock market live coming at you right now. We're about 10 minutes before the opening bell, and I'm gonna talk you into the opening bell, and we'll look at some possible trades, and maybe we'll see what we can find. Right now, the tape action is looking like we had a big non-farm payroll number come out. And basically, jobs are pretty good. So you would think that that would be a good thing for the market. But what ended up happening is the market sold off. So the before the news, the S&P 500 futures were relatively flat to bullish. They were green, and right now we got the S&P 500 futures down 22 handles, about 0.5%. We got the Nasdaq futures down 0.75%. The Dow futures are down 0.25%. I'm reading right over here on the left, and we got the Russell futures down almost 0.5%. So I'm just awaiting the opening bell. This morning, it pretty much we didn't get a whole lot of overnight action. Everything's pointed toward that particular jobs data. I did see something come across the tape earlier. Hong Kong Stock Exchange is launching blockchain-based settlement platform, which I think is going to be excellent. It's going to be great. That would be something for you guys to look into, look out for. I'll be looking out for it. I don't know how accessible it'll be for uh, U.S. citizens, but that is something that I think would be pretty good. It'll be better than hopefully all the exchanges will move to that, and I think that'll do away with the T2 um, settlement, like how they settle the stocks and stuff right now. So it should make settlement pretty make it faster. Basically, if you had something like that, I think that would have affected how the AMC, how the meme mania and all that stuff happened, with the options and I think that would have helped with that as well. I think that'll help with everything. So let's take a look at basically if you're looking at the market and you see that the VIX is up, which is what we're looking at, we got the VIX positive, we got the VIX futures positive. So we're gonna have a down open, basically. The reason why I look at the futures market, because the futures market is going to tell you that, even though the stock market hadn't opened yet. So I can pretty much, if I click on, let's look at Meta. See how Meta has a bid ask spread of $300.54 and $300.80, but the close yesterday was 304. So it's going to open down. So we should get an open in Meta somewhere. It's going to gap down. Now, if you look over here, I got the 1 minute chart in the top right corner. You guys probably won't see that if you're on a phone. If you're looking at it from a desktop computer, you'll see it. But I can see the pre-market, and the pre-market is down on Meta. So it's quite possible that that we could get a gap down, and Meta might run a little bit. May not be, we may get some scalping opportunities early in the market. Let's take a look and see what the expected move is for Meta today. So the expected move for Meta is $5.62. Now, it's already down pre-market $4. So they may give you another extra dollar. So we could see the market bounce. You can see it bounce soon as the market open. That's why I like to look at the expected move. I'm over here looking at the minute chart over here in the top right corner, and I can see that the market that is holding, waiting on the opening bell. If we look at Meta, we can see that it's trading in a range. And if I look at, I'll pull up the squeeze indicator, I can see these little red dots. So it's basically squeezing right now. So we could get a breakout to either side in Meta. So let's take a look at Apple. We look at Apple, we'll see the same thing. See how Apple is down. Apple had a close yesterday at 174.91. The bid ask spread right now is 173.79, 174. So it's down about a buck. It's down about a buck pre-market. Um, and I think I can make it a whole lot easier. I can go ahead and change. So what I'm getting ready to do is change this over here on the left. I'm going to change the IVR. Well, I changed the 5-day index I implied volatility. I'm gonna take that off and then I'm gonna put the bid ask over there. So it'll automatically show it. Or I got the mid price. So that's even better. I already got it over there. Look over here, you see where I got mid. So the mid is the difference, is the mid price of the bid ask. So if you look right here, it says Apple bid ask 174, 174.10. Right here it says 174. It did say 174.05 and then it moved. The mid price is going to show you basically the opening bell price. So I can just leave it right there and I don't even have to click through them all. You got Amazon. Amazon is going to open down about $1.50. Google, let's go to the trade tab. Google is going to open down about a buck. And so if I want to look at Google on the option chain, it only has a $1.62 expected move for the day. Now I'm looking at this option expiration right here, which expires today. So that'll tell me I'm not expecting a whole lot of movement in Google today. Microsoft got about what, $3.62, and it's down that right now. Tesla, the same. Tesla has a $7.63 expected move today, and it is currently down about $6.40. So let's see if I can call this tape action. Now, I think the market's going to open, and of course, it's going to open down, but I think it's going to bounce early and close the gaps in these stocks. Just because it, so I see we got all the expected moves for the most part that I'm looking at in these stocks. The market is already down that. So Netflix is down about what, 4.5, and I'm looking over here. It's only got a expected move of $6.70. So it can probably go down another $2 before it hits its expected move. Then you'll probably see some bulls come in and buy it up. And we'll, but may get a bounce. Nvidia down $5. Nvidia has a $7 expected move, and Boeing is down about a buck, and it only has a $2.34 expected move. Caterpillar, Caterpillar is relatively flat. So yesterday, me playing the bounce or trying to be proactive on the bounce. So if I'm looking down here at the bottom of my screen, you'll see on my stochastic right here, I got a low, a high, and then I got a higher low on my stochastic. I had a trend line drawn down there. So generally when I get that, this is what we call divergence. So I got divergence on the stochastic on IWM. This is the ETF of the Russell. So let's I'm gonna hide these draw it's gonna hide the indicators too. So let's take this off. I'm gonna move that. Then I'm gonna remove that. My Fibonacci ratios, I can put them back on so that you can see. Now you see I got on this, I got a low, a high, and I got a lower low. So I drew like a trend line from here to here. And you can see that I'm making higher highs or higher lows, excuse me, on the stochastic. So that's giving me a little divergence. Now I stepped in yesterday, and that is the opening bell. Now I stepped in yesterday and got put on a bullish trade. Now also because of that divergence, like I got a wick. So you see, you got a wick over here. You got a wick right here. You got wicks, wicks, wicks. Now these are just these long tails of these candles. This is a hammer candle. And so I said, well, let me play the bounce. So let's see if we can get that bounce right there. And what I still did a high probability trade. I sold a put spread. We can come in here and I'll show you on the option tab. I came out 42 days. Only thing I wish if I would have did, thought about it later, I probably would have sold short term. Since I'm playing a short term bounce, I would have came maybe 14 days, 21 days, somewhere up in here. But it's okay to go further out in time. It's gonna move a little slower. Less time, you're gonna get, you're gonna be more directional. The less time you have, the more directional you're gonna have. You'll be exposed to a lot more gamma, and the theta moves faster. It decays faster. But when you give yourself more time, the numbers play out. The probabilities play out. You have a higher percentage of them playing out to your advantage when you stay within that 35 to 65-day range when selling options and using your probabilities. So I'm out in November, 42 days. And then you can see I sold the 169 and then bought the 164. And if I go to let's go check out the analysis tab and check it out. You can see, make it a little wider. You can see I want the market to, you can see where the market is right now at 170. You see the market moving up, bouncing, and you can see back here is where I lose money, and over here is where I make money. Basically, I need the market to go up, or it can stay flat. I just don't. My break even is back here around, what, let's call it, what is that, 167.60, somewhere right around in there is my break even, and you just need the market to stay up here. I don't know why let's see, put the green back on there. So all I'm doing is going up here. You can change whether you want to see the theoretical, your P&L at expiration, your theoretical line, which is right here. This orange line right here that you see, as time goes on, it's going to start to bend to where it looks like this. And so that's your theoretical P&L. And so you can kind of move it and say, like, if the market, let's say the market goes up to 173 today, you can see how much money you make as the market goes up. Now, I can also come over here and go to analysis, and then I can change the date, go out in time. So today is the 6th. I can go out. Let's go to next Friday, which is the 13th. Now, let's go right back over here and let's see. Now, if the market is up here at 170, let's say the market is up here at 175. You can see the P&L just changing. I could change the theoretical spot price. Let's put it on 180. Then you can see right here what I'd have to move my tab all the way up here. And it's saying I got a 26% chance of it getting up there, and I would make 73 bucks. We get that move. And I also, now that's not me taking, you can see the probabilities over there. And as I move the price down, let's go to 175, up over 39.6% probability of it getting there by this date. You also can take the IV out. Let's see if I want to put it on IV per contract. So it looks a little different when you do that. But it's a lot of things that you can mess around with on the Tasty Trade platform. I like to come play around with it. But ideally, you can use if you over here on the table on the option chain, you can use the probabilities. It'll pop up on the screen. So let's say I'm thinking about selling a call. I mean selling a put. I'm looking at the market. Let's go back to the chart. So I say, hey, I think it's gonna continue up. Maybe we got the bottom. We oversold on the stochastic. We oversold on the RSI. And let's say I'm saying, okay, I'm gonna get a pop right here. I come right over here. Let's say I want to sell this um the 30 delta right here. 30 delta. I always use deltas when looking at how I choose my trade. And then we'll talk a little bit about that. Click right here, sell. Now, if I want to do that, I'm gonna come down here and hit this lock button. Now, that means this 250 right here is not what I'm gonna pay because I'm selling it. That's how much I'm gonna take in, how much credit I'm gonna take in. Now, right now, if I take that trade, no matter what the chart says, no matter what I think technically, or whatever technical analysis I've done, no matter what fundamental analysis, no matter what they said on TV, the math is telling me selling this 30 delta gives me a 75% probability of profit. Now, if I say, hey, I'm okay with just keeping half of this 250, making $125. What are my chances or probabilities of that? Right over here, it says P50. You see, it says 88%, 87, and it's fluctuating. So that right there is how you choose. And you say, well, you might say, well, the delta is a ball. Not every platform has these numbers at the bottom. But if you choose in delta, so roughly, now this isn't exact. So you would say you sell the 30 delta, you got about a 70% probability of profit. Somewhere around in there. You can ballpark it. If you choose the 75, excuse me, the 25, that's gonna give you about a 75. And you can just come out here and see the expected move over the next 42 days is gonna bring you right around 161 to 180. Like because so basically it's plus or minus 940 from where it's at. And that gives us this so you see this little ruler. So a lot of times you can play around the expected move if you want to sell both sides and do maybe something like a strangle. So you don't necessarily have to be directional. You know, you just sell the expected move and say let the market come beat you. Sell this, say I think the market gonna stay within here. Take in 284, and you can see down here I got a 84, 85% of collecting or keeping half of this amount. So let's look at the chart and see what's going on. You can see market is kind of holding. Let's see if this area holds right here. I won't be doing any scalping today. I thought about it. Just just looking at the action right now. Um and I'm looking at, you may say why I'm looking at the Russell, because I believe that the for me looking at the markets, the Russell is going to lead the action. The Russell pretty much leads the way because it's more volatile. Sometimes it's the Nasdaq. Now you can see maybe turning over. Let's take a look at the Nasdaq. Let's look at the QQQ. And what you'll see on the QQQ, it's down about $3 or $4 on the day, 3.5 bucks already, just because it moves a little bit more. Let's hide the at my fib levels. Now let's see. This is my 9 SMA. And so right now, short term, we do have some bearish momentum moving to the downside. Already I see, let's do something like, now if we come intraday, I would probably, if I came, let's go to the 30 minute. I'm gonna draw some trend lines on here because I can already see we in a range. I can see that by looking at. So we can already see. You can see this 200 SMA right here, like it's holding as resistance. You can see like almost like a triangle forming here. So let's draw a trend line. Let's do something like so. Do something like that. Bam. I'm gonna take all this off so we can. All right, now let's get these trend lines on here. So we'll draw something like this. Let's take a look at that. Something like that. And then let's do something like this. We'll draw a trend line here. Bam. I'm gonna make it a little thicker so it can be seen. Uh come here. All right. So for me right now, this is what if I was going to do anything, I gotta see it break out of this range. I like to see it break out of this range and then retest this range. I don't need you on there. So you see, recenter that. So you guys see, we can see we in a range. So I would like to see it break down here if I wanted to get short, maybe see it break here, pull back, retest, or you want to see it break out of this range and go higher. Now, when it made this low right here, see this little hammer candlestick right here, popped up, pulled back, retest, and went higher. I'm bullish. Like I so in my, I talk to you guys, I manage my 401k, so I did get long in the triple Qs. And I know we got a lot of bad news out there, but if the market was to sell off really strong, I'm nimble. I just get out. Just close your position. Don't hold a negative position and you losing money. Or sell calls against it, depending on how many shares you own. So this range right here, in order for us to get bullish on the Nasdaq 100, I gotta see it either break out of this range. So those of you that's selling like that are trading like CFDs, so you could be trading the NAS 100 or the US 30. So the NAS 100 follows basically that's the Nasdaq 100. So that's your forward slash NQ futures and that's your QQQ right here. So this is the stock. This is the ETF. So it doesn't have overnight action in it. So but this range will be the same chart if I pull it up, the NAS 100. You'll just see the overnight stuff in here. So we want to see the price action. Take this low out, come back, retest. So you get something like a bear flag, break it, retest, and then go lower. In order for me to get short, I actually am bullish, so I think that it's gonna break out to the top and go higher. Let's take a look at the something else I want to show on the SPX, and I'll show you guys why I do expected moves. And I do this every weekend. I try to get the video out on either Saturday or Sunday. I do it this Sunday and get the video out. Now, if you look, now this line right here, this green line and this red line is from last week. You see how the market touched last week on September 27th and it popped. That that expected move held last week as support. Now look at this week. This Friday's that expires today. This is the expected move for this week. It touched, and it's holding. It hasn't broken it yet. So it's holding like support. So one way that you could trade that if you were like if you were looking at that, you say, well, is that valuable? Let's say you were doing a zero DTE option trade, like that you hear them talking about all the time. And they say, well, it's gambling, it's gambling. It's gambling if you don't know, if you just come in and just, you don't have any type of strategy. right? There, I think there's a fine line between trading, investing, and gambling. There are a lot of similarities in them, right? But in this particular instance, we know that this is the expected move for the week, and we write down here buy. So if I thought that it was gonna hold, I could come right here, guys, and sell this expected move if I wanted to play it to the end of the day, right? Try to keep this buck. Take a bet that the market's gonna hold right here. Or I could sell the expected move altogether. Sell that, come up here, sell that, and see if the market and place a bet that hey, that the market's gonna stay between in here. So that's a way that you can use it intraday wise, position trading, maybe, and you also got the 200 SMA holding right here. So this 200 SMA is also so that gives for me like it's stacking like a lot of things in my favor to make me, feel okay about if I wanted to get bullish right here. I also will come over here and look at this is the 4 hour. It should be the 4 hour of the forward slash the S&P futures. And one of the reasons why I like to look at the like straight price action on the futures is just to see what it looks like over here. Now this has all your overnight action in it. So I also have divergence on my oscillator down here on the futures on the 4 hour. So ideally I may put something on right here to try to take advantage and see if we get a pop right here. I think it's possible. Let's take a look at Tesla. Tesla's down about 3%. So that's a big move. Out of all the moves, Tesla is moving the most right now. All right. But it is above the 9 day. So it's above the 9 SMA. And it's kind of like holding right here. Um, so let's see. Let's see what a day trade will look like in Tesla. You can see the expected move isn't a lot. It's only factoring in another $3.34. So if you were to try to if I was to try to scalp an option, man, I pull the trigger live. I just wanted to, it's not a lot of movement factored into this market right now. Let's put this up on Tesla. Let's see. Now I'm pulling it up over here on this. Now, if you look to the left, this right here is like my main chart. And then I'll come down here. Now I can break this up into quadrants. I come down here and hit tasty charts. So I can break that up into quadrants. And nah, right now I don't like the way that look. Let's get the. We're gonna put this on the 30 minute. Let's see what it look like. If anything, if you're doing anything in Tesla, you gotta go. You gotta be short. If you're buying anything, I'd have to buy a put. If I was gonna do anything with the way it look right now. So, and I would have had to gotten in right here. Let's see. Well, I couldn't have because this was the opening bell right here. So I don't like for it to already have his move because this is showing overnight action. I don't like for it to already have his move and then come in. I don't like I call that shorting into the hole. Already down. You want to get in before it makes its move. You get in down here. Now it could go further. What's the next level? So you can see we got a bounce right here. This would have been some type of support. And then you can see right here is the next level of support on Tesla, and that's right around what 249, 248.50. So if we came over here, let's put a rectangle right there. And this pretty much this is how I do it. Come right here. Let's put this right there. So that's probably where, let me move it down a little bit more. We'll probably get some, we're gonna get some support. I mean, yeah, so we'll get some support right around in here. So right around 249, I would say that Tesla will probably slow up. And that's where the support is. Now let's go back to the option chain. What we got? Another $3. It says we had 251. What I say? That's right around what, 248.50. So that coincide with the chart, right? So the option chain is telling you, if you don't know anything about technical analysis, you come down here and look at this option chain. You can see it's showing you where the market, where the options is telling you that the market got support and resistance. And you can actually use the option chain for support and resistance for the particular expiration that you're looking to trade. And so that's basically what we have there. So I won't be doing anything in that. I did post something on Twitter. Make sure you guys follow me on Twitter, because a lot of times on Twitter I'll post a chart. Like if I'm, I told you guys I do have a full-time job. And so sometimes I see something and I just post it on the chart. I mean, I'll take a screenshot or I do it on my phone and I post it to Twitter. So let's see why does it look like that. Let's put it. duh, So Costco's, I wasn't expecting this. I had been trading Costco to the upside the past couple days. As a matter of fact, over the past week, I made about 195 bucks in Costco. So also on the over here in this little area here on Tasty, you can click on order chains right here where it says order chains, and it just shows some of my previous trades um, over the last 30 days and whatever stock I'm looking at. And you can see in Costco. But that's when I was trading it intraday. Now every now and then I do some scalping, some day trading. I don't do a lot of day trading, but I do some. And so we got a gap down right here. Now generally I have been bullish on Costco. They had good numbers. They uh, had good earnings. So I've been bullish overall. Now you can see right here we got a gap down, and it's below the 9-day. So here, right here is the 50. So my three moving averages, I got a 9 SMA, a 50 SMA, and a 200 SMA. SMA, if you don't know, it stands for a simple moving average. I got some comments. My bad, guys. I ain't used to looking at. All right, I see. Hold on, Paul. Paula's channel. What is this chart, bro? Um, I am. So what is this chart? I'm using TastyTrade. I don't know if that's what you asking me. I'm using TastyTrade. CG3. My bad for not for I ain't even had the comments up. What you got? If you know the trend line and the stock is trading in a range like in the previous chart, what type of option strategy could be used to maximize profits? CG3, which so if you know, all right, my bad for just now I know to keep my comments up so I can see it. All right. So if you know that a stock is going to trade in a range, or you think, right? We don't know it, but we think. We're using technical analysis and we think that the stock is going to be in a range. We can trade the range by selling options on either side of the range. So let's say um what's previous stocks I've been looking at. So let's go back to, I'm trying to see which, let's say Tesla. I don't know if I was on Tesla. So CG3, if you're still watching, post what stock, give me the range. But I'm gonna go to Tesla, and then we'll look at Tesla range. Let's say now I like to use let's use the daily. Let's say Tesla is we think Tesla is in, I don't know, this range right here. Let's say we got this as a low and we got this as a high. And we think that Tesla is going to stay within this range from here to here within like the next, I don't know, 2 weeks or to the 14th. Now, Tesla got earnings coming up on October 18th. So I generally would not sell options with an earnings coming up, but you got to be real experienced. If I did, I would go way out past the earnings when the date of the earnings. But if I want to sell, I want to stay within a range. And I said I already identified as 234 as that low. And I'm in 14 days. I will come here now. The option chain is telling me that the expected move is possibly right around 230. But let's say through my analysis, I say I'm good with 234. You could sell the 235 and then you could sell the maybe the 275. I wouldn't. I always like to be around an expected move. So we come right there and sell the 230. We ain't got to get cute with it. Sell the 272.50. I would do an iron condor. Excuse me. Buy the 225. Buy the 270. Well, buy the 277. I don't like doing half numbers, so let's just move it to the 75 and 80. So we're gonna sell the 275. Buy the 280. Um, Sell the 230, buy the 225. We created an iron condor. Now this iron condor over the next 14 days, we think price actually gonna stay in between here. We're gonna take in 190. I'm gonna lock this. I'm gonna hit this lock button. We're gonna take in $1.94. We're gonna risk 306. So you're risking $306 to make $1.94. Now, a lot of people, hold on, let me get some coffee. Okay, I see you. QQQ was the chart. I'm gonna go back to it. Let me finish this example, and then I go back to QQQ. A lot of people will say, why? They would say, um, why would you risk more to make less? The pot odds are you're putting the numbers on your side. So yes, I'm risking more to make less, but I have a 62% chance of making 50% of this. So I'm putting so basically the law of large numbers says that if I do this, the more I do it, the more the probabilities will play out. And so then someone else will come and say, well, that's a zero sum game because then you'll lose more on the smaller times. That's when you do option trading, you can roll options. So like meaning that's why I wouldn't do it 14 days. I would do this I would come out like maybe 35, 42, 49. I would be right around in that range and I would do it here. Now let's do it here. And let's say I get pressure. Let's say the market is down here, right? I can roll this side down, the untested side. So as the market's coming down, I can roll these options down, meaning buy it back, roll this down, pick up credit. And I can continue to do rolls back here. If the market comes here, I can roll back here, tightening up the actual spread. Or I can take this, buy it back, sell it, and then roll out in time. Come back out here 49 days, 70 days, and pick up more credits. So you can buy time by rolling your options. And maybe I'll do that live to see so you guys can see right now, what that looks like if I get some pressure on this IWM trade. So now I'm going to go to the QQQ chart. Let's pull that back up. All right. And this is so in this range right here, man, I guess if we're saying this range, I think what was I drawing? I think I was over here drawing. I think I know what you're talking about. When I drew the, I think it took my lines off. So I put them back on there again, and no biggie. Let's remove this. We'll go. I'm gonna go back and do this again real quick. So draw this trend line here. Boom. Come here. There's a couple things you can do. I'm gonna give you a couple things that's possible here. Now, so we can see we came here, broke up, gave us our little bull flag, right? That's what I call a bull flag. Got something like this is your little bull flag. Here's your pole, right? To your high, and then we got our chop in here. There are a couple things you can do. There are a lot of things you can do if you're bullish, right? And you gotta you so you first of all, how I if I buy an option, if I buy an option, where's your resistance level? Like where would you say you think that the market could get to if it breaks out of here? So what are our next levels? This is a gap right here. So that's probably why we got the chop here. So maybe this level right here could be resistance. So I'm gonna give you a couple things that you could do depending on what kind of trader you are, right? So that's right around 366. So I would come if I was gonna buy a call, which I'm not. I would come around with 366. We're at 355 right now. So that's an $11 move. I would come on this chain and find out where an $11 move is right here. 12 days, 12. I mean, yeah, that's 12 days, $10.91. 14 days, $12.39. Look at this option chain right here. It's going all the way to what, 368? So that will put you what? Right in here. So if I was, and here's your 200 SMA. Now we're on the intraday chart. Now we're on the hourly. So I will come in here and right around this range, and I probably would come down here and find this 366 and buy this call. I got a 51% chance of probability of touch. This is touch, and you just need to touch it. So what would happen is if I'm buying out here out of the money and it moves in the money, depending on how long it takes. If it did it today, I could pay $225 and make 700. That's just one example of a trade, right? Something else you could do. If it's something is in a range and you think that it's gonna bust out of that range, right? There's something that you can do. You can call It's called a straddle. You can buy the straddle. When you're buying the straddle, you could come. I would not. I don't like. I'm showing you different trades, but you got to use discretion. When you buy options, when the vol is high, you're gonna and the market goes up, you could lose money and you could be right directionally and still lose money because of vol crush. So that's why I'm just showing you different trades. And then I'll show you probably what I would do. But I'm gonna show you I give you all the tools that you can do. And then you gotta kind of like, experiment with what you think is best for your style of trading. So you could do something called buying the straddle. Buying the straddle. Let's go back to this same option chain, and because you might be better at technical analysis than I am, so I will show you the trade. When you want to buy the straddle, there are a couple ways to do it on the Tasty Trade platform. You could come up here. You can, and also, guys, if you want to use Tasty Trade, it's a link. It'll be a link in the show notes. You can use my little affiliate link. So you can come up here, hit this arrow, come down, and you can see it got different trades on here. You see where it says straddle, long. If you want to buy, you hit go, and then there it goes. It puts the trade on there for you. Now I'm gonna lock it. when you buy options or you buy this straddle, it's telling you at the bottom your max loss is basically what you pay for it because you're gonna pay $1,278 for it, right? Now, what you're doing when you buy the straddle is you are betting that the market is gonna exceed the expected move. That it's coiling up and then it's gonna boom. It's non-direct. You don't care what direction. It's either gonna break out to the upside. Now I'm going down the chain because that's how the option chain is, or it's gonna break out to the other side. So you can buy it because you're betting that it's gonna exceed this move right here. That's one trade. That's one type. You can bet on that, or you can buy the call like I showed you, or what I would do, and it takes a lot of patience to do these types of trades, but they're in my opinion is better in this particular instance because we have high implied volatility. The VIX is up, so vol is up. When the VIX is up and volatility is high, that means the price of options, expand. They get more expensive. So it's kind of like this. When would you want if I don't want to use that example because we just had that incident in Hawaii, but it's relevant to what I'm saying. What would you want to do with insurance, right? Would you rather be the buyer of insurance or would you rather sell the insurance when the flood, let's just say a house is flooding, a zone is getting ready to flood, or the flood is already occurred in this particular area. You'd rather sell the insurance. Why? Because insurance premiums are going up. The event is here and people have to have the insurance. So you'd rather sell it. It's the same idea with options. Like we already got a sell off. The time to have bought those options when you wanted to buy them was before the sell off. So we had the sell off and you don't generally want to buy options when they're expensive. You'd rather sell them. So what I would do, either I'm going to pick a side, right? And sell either if I think it's going up, I'm selling puts or put spreads, betting that it's going to go here. Or if I think it's going to continue to go down, which it looks like you see it, I'm going to sell a call spread or sell calls here. Now you can buy puts or calls. You buy a put, you're betting on the market going down. You buy a call, you're betting on it going up. But if you sell a put, you're selling options. You're taking a bet that the market is going to go up, or that it's going to stay where it's at. Because you don't necessarily, when you sell options, you don't have to have the market go where you want it to go. It can just stay in a range. And over time, you're going to get time decay and then you're going to get volatility decay. And so the market, let's just say you came, let's just go, let's say you came somewhere down here and sold like the 24 Delta, right? We'll lock that. You collect in $428 in premium and you got a 81% probability of profit and you got an 87% probability of making 50% of this. Meaning that you just want to, once it decays down to 214, you buy it back and take your $200 and keep it moving. And you can see where your break even is on here, right? Your break even is way back here because you at 336, you taking in $4.28 in premium. So what that does is that premium pushes your break even back around 332, which is why this area gets gray. And you don't lose money until it gets down here in this red area or up here. So, and then now buying power, it is going to margin you $5,158 of margin or buying power. And so you may say, well, man, that's too much. My account's not big enough for that. Then that's when you do the spread. So instead of staying right there, you can come right here and maybe make it a $10 wide spread. Buy this. They call it when you do this, that's you're buying the wings. Like when you're doing like butterfly spreads, even when this is a wing. So I'm when I hit this to buy it, that's gonna cap my loss. Now I got a fix. Now it's a a fixed spread. It's a fix. I can't lose. People be like, even though I don't think the QQQ gonna go to zero, you see how my buying power is only $840 now. I actually would come closer if I'm gonna do a spread like that, so I can make more money. So I do something like that, and so there you go. If you buy that wing, that'll cap it, and so that's the kind of trade that I'll though something like that. If you're good at picking targets, like let's say you think like it's really gonna go right here and target, you can do you can do a butterfly or a broken wing butterfly. Maybe you can buy a call spread. I just don't like buying options when vol is high, but you could buy a call spread 14 days out. You think it's gonna get over here? You really think you'll get there in 2 weeks? Um, buy the 355, sell the 357. That's a call spread. Or you can put the spread out there, spend less, buy the 364, sell the 366. When you're only paying 65 cents for it or $65, and you can make 135. So this is one of those trades. This is more like I'm gonna risk one to make two type deal right here. This is what kind of trade that is. The one I'm selling is where I think the market will get to, and I'm buying the 364. So low probability trade. You can see down here, of pop is 31%. But if your technical analysis is right on, then you jam up with it. That's type of trade you can do. But I don't advise buying options when they're expensive. Yeah, get good at selling them. Learn how to sell them. And then you get to the point where you don't care about direction. You just say, make the market beat you. You just start selling the expected move. Um, so right now you guys can see we still in this little range. We ain't did anything since we opened up. You see the market. This is an hourly chart. So this was at 9 and so this is 10. Something else that I'm going to show you on Tasty Trade that I like to look at is I like to come to the watch list and do the Tasty hourly top equities. They will put this out at 10 o'clock. And so you can see the top equities for that's running through the platform right now the most people are trading. Tesla is generally number one. Now this one is number two, which is pretty different. The bonds. We got the TLT. It's the ETF of the bonds. Let's see. Now I'm gonna bring up a daily of the bonds. It is on the daily right up here. See what it says the RSI is green at 24. It's oversold as far as the RSI concerned. So bonds are basically crashing down. Bonds are crashing down. This is the Bill Ackman trade that I've been talking about. Bill Ackman is shorting the long end of the bond. He's shorting the 30-year, which is your ZB/ZB, and they're continuing to fall. I mean, you got to be brave to step in front of this knife. Um, it's kind of people are trading it because obviously it's right behind Tesla, so people are trading it. I don't know. It doesn't move fast enough to scalp. It's not moving like that. So I'm if I'm willing to I am a betting man. So I'm oh man, you're welcome, man. Thank you for watching. I'm b- people the majority of people are probably selling options here. They're more than likely they're selling puts. They're coming in here and they're probably selling puts. You if you sell a put here, you're saying to yourself like, "Hey, I don't mind owning this, right?" You might sell a put at the 82, take in this got to be careful with trading TLT though. TLT has a monthly dividend. So when you're on the call side and you have calls that are in the money, you're in danger of, getting put uh, getting a dividend and getting assigned shares and stuff like that. But so TLT, like I said, does pay a monthly dividend. So, and it with it being down this far, I'm guessing I'm willing to bet that most people want to own it. They want to own it down here because you got to look at it. Let's look at a yearly chart. I'm gonna go. Let's go out a year. So I'm gonna look at. We're gonna stretch this out a year. Probably need to go out further than that. Look at that. It traded in a range for almost a year, really, and then it just broke out to the bottom. I'd have to look and see what. And I mean it. And so when you look at this, it's like this momentum carrying on down here. It's crashing down. I think that the Fed is gonna have to step in here at some point because the bonds are crashing down. Bonds crashing down like this, something getting ready to break. I'm, t- I'm telling you, something getting ready to break. I'd be, I'm eager to see if these small regional banks, if they on the wrong side of this, and that's what we seen when we seen Silicon Valley Bank and we seen some of those other banks, those small regional banks go under. They were on the wrong side of this. And so we'll see what happens. And whenever I want to, and you can see, I'm gonna make the volume a little darker so you guys can see it. I'm gonna make it pop. So right now you can see the volume on the chart. Now, what do you notice about the volume back here and back here? The volume over here is increasing. So one of the things when you start looking at tops and bottoms, you want to see volume taper off. You want to see less trades being made because then like, okay, it's slowing up. You're like, okay, it's slowing up. It's getting ready to turn, right? There's that whole analogy I give about driving the car and turning the car. You driving the car and get ready to turn it. You don't just you don't just hit the brakes and just whip it. You slow down. What people does, look at the volume. It's increasing as it's crashing down. I'm watching Bank of America. The higher the rates. Oh, okay. I just figured out how to do this, man. I'm watching Bank of America. The higher the rates the rise, the higher their unrealized losses accumulate. Yeah, I get what you the because that's I think they call it like mark the market or like they don't have to mark the so you talking about so as the bonds go down, then you can see the yields going up and the unrealized loss. Yeah, they don't have, but the thing is, they don't have to. I don't think they have to mark them on their books. At least not right now, anyway. So I don't know when they're gonna have to show those losses. I'm not really worried about Bank of America as much as like Bank of America will probably be fine. They could probably handle it. Then I think they one of those too large to fail banks. Also, what J.P. Morgan, or Wells Fargo, those big banks, Citi, who else? Those banks. I think they'll be fine. It's gonna be those little small ones. Those will be the ones that they don't have the capital. They don't have the capital. But yeah, I see what you're saying. You watching Bank of America, that's how you can keep track of it. Yeah, and I think that when that does happen, we're gonna see a lot more. We're gonna see some bad action. But when you get that type of action in the market, when we get a sell off, I'm gonna try to make sure I do a live on the day we do a sell off. So then that way I can be on here and show you just how easy it is. That's the best time to trade. Because when it's crashing down, you just come on and you just buy puts, or you just find something to short and you just short it. Whatever you can, because when it's crashing down, it's just gonna keep crashing down. That's why they put those circuit breakers in, try to get people to calm down and slow the market down. Well, I might be talking too much, but um, so one other thing, I had something, man. I did. Oh yeah, I want to look at. I'm gonna do the chart is similar to 2008. Yep. Yeah, you're right. I'm gonna pull up some forex stuff. Look at the euro. No, I got some people that like to look at the euro USD, and it's been crashing down. So you looking at this? Let me change this volume back. That look nasty. Can't even see it. I like to have it very light just so I can barely see it. So I know it's there though. All right. I'm gonna go to I like to look at the 4 hour. I should have came over here and looked at it. Let's put it in here. 4 hour. Let's go. So you can see we got divergence on the Euro USD down here. My oscillator here, and it broke up a little bit, but you can see when that news came out. This is why. This is one of the main reasons. And when I be talking to some of the guys um about like day trading, this a 4 hour candle. If you were short, now you could have been long the past couple days, right? Or you could have been long this morning and doing good. And then that news came out. Look what it did. It blew you out. And so some people be like, man, they stop hunting and stuff. No, they not stop hunting. I don't believe that. I don't believe they stop hunting. News came out and the algos went crazy. And so the algos, they have some of these hedge funds, these prop firms, and some of these places have algorithms that can read news, right? And so it certain news come out and then it just go crazy. It just go crazy. Yeah, I'm looking at a 4 hour candlestick. If we looking at this on like a 1 minute, let me see if I can pull up a 1 minute chart. Pushing my computer to the max today. Let's see. Let's look up 1 minute. Look at this. So the news came out at 8:30 right here. So you on a 1 minute chart. I do not trade. That's why I don't trade like 1 minute charts. If I do, I'm trading the option. Most I can lose is what I paid for the option. Now, if you were short right here, it took you out. You got short right here, thinking it was gonna break out. And then that news came all the way up here and took you out. Now you saying you crying talking about they stop hunting. No, no. You shouldn't be on this small of a time frame trading and news getting ready to come out. And if you do make money, you getting lucky because you don't have no idea what the news gonna do. Look at this wick right here. So it just boom, and then came down, took off. Came all the way down here within a time frame of that's like 22 minutes, man. From here to here in like 22 minutes. And then now you got chopped. Now it look like it's getting ready to come back up. So that's why, for the most part, even when I'm day trading, shoot, I'm looking at daily candles. I trade to break out on a daily candle. And I still like this bullish overall. Euro USD, I would be bullish this overall. Like I'm, betting on to the upside. Couple you can trade this with options. Um, because you can see it breaking out on the stochastic, and it's been down. Look, all the way since what is that, July? Just in a straight. This is probably like a nice wedge. Let's see if I can. I'm gonna draw this and then let's see. Let's see if we can draw a wedge on here. Eh, I don't think it. If you got, I do it on a daily. It ain't kind of. It's almost too narrow to even be in a wedge. If you guys can kind of see, like to get some, I don't think I can get no good trend line on it. Come on, what you doing? Uh, what like this? Because you got that little hump right there in the middle. Let's do it like this right here. Look at that. More like a channel. I'm gonna bring this down. So see, probably be better to do it like something like that, like so. There you go. It's almost like a channel, and you can see it's just been going straight down like this. Now, if you can get something, if you can get a break into here, it may come all the way up here and test highs. Now, keep in mind, in order for the euro to do that, this is matched against the dollar. So if we're gonna see something like this, then we would need to see the dollar coming down. Let's take a look at the dollar real quick. XY. Let's see if it can give me a chart. Look at the dollar real quick, and then I'm gonna. There we go. Now you guys see how I pulled up the euro USD, and then now we look at the dollar. So in order for that euro, if you want to get long the euro, you're in essence getting short the dollar. Understanding that relationship. So, and it's possible. You see, we got a long wick right here. Let's see how we ended. Let's see how we end the day. And because I don't think you can trade. I don't know too many platforms where you can trade the dollar directly. I think they got some offshore platforms where you can do that. But I don't think they letting you trade the dollar directly here in the States. But like you can buy the euro USD, and then like I said, in essence, that'll be getting short the dollar. So that'll be on my radar. I will be looking at that. And then gold been crashing down. You would expect once when you see gold start crashing up, um, and that's the thing about gold, it generally crashes up, but the past few days it's been going down, which is that's weird. Like that, I don't have an explanation for that. I would be thinking that with all the debt that our government is running up right now, you would think that people would be running to gold, but they're not. Not based upon the gold futures. So I don't know where they're going or where they putting their money. And it ain't Bitcoin because Bitcoin ain't is not running up either. We look at the Bitcoin chart. I imagine it looks similar. Let's, let's look at Bitcoin. It's holding. You can see it holding in a range. So it looked better than the gold chart though. I will give it that. It ain't crashing down. So it's kind of like just going sideways. But hey guys, make sure you please hit the like button, hit the subscribe button, and let me know if this something you guys, if you enjoyed it, it's something you want to see me do on a regular basis. I might try to do this like every Friday. Um, I may do it on a daily basis. If I get a pretty good turnout and I'll continue to do it and go over stuff and talk about the markets and get my own little take on what's going on in technical analysis. And with that, guys, I'm gonna be out. I appreciate you guys watching. Thank you. Peace.